Now the next play we want to talk about is what we call walking the band. This is really just a trend trade, just like you would see with the moving averages, but the difference is it's contained inside the Bollinger Band system. So this is a trend trade, and here's what happens. The stock will walk the band, or it will walk between the bands. It's going to walk right between the middle and the upper band if it's a bullish trade, or right between the lower and the middle band as the trend progresses if it's a bearish trade. Take a look over here at this quick picture, and you see how we're just walking the band there, and we're between the middle and in this case the lower band, and that's what the trend trade is going to be. What often happens in a trend trade is the stock will push right into that upper band or right into that lower band, and it'll just keep walking right along the band there, and the longer it stays there, the stronger and the longer that trend's going. Now there's an exit coming, and we'll talk about those exits, but this is the way that a trend trade is going to show up and look on your Bollinger Bands. This is very similar to just the typical moving average trend trade, the trend trade you're very familiar with. Let's take a look at this picture here on the Euro US dollar. Notice how this evolved. We had a squeeze that started. It actually gave us a false break, traded right back up to the upper band as you would expect, and then it pushed right down. And as we got into that lower band, watch what happened. Boom. There's your walking the band. You see how we're just walking along the band there? It sideways steps and then moves down, side steps, moves down, just pushing into that band, into the band. And when you start to get a lot of pushes out of the band, as we see at the end, that's usually going to be towards the end of the move. Now, when these things correct, a lot of times you'll see some of these and they correct over to the middle band and then they continue. But you're going to stay typically between, if it's a bullish trade, between the upper band and the middle band. If it's a bearish trade, between the lower band and the middle band. But you're right in that little space there, and that's why we call it a trend trade, and that's why we call it walking the band. This is a very powerful picture, especially if you're not using your moving averages. If you're using your moving averages, frankly, it's kind of a redundant signal. But if you want that trend picture all inside the Bollinger framework, this is the way you're going to see that trend picture shaping up. Here's another example of this. This is on a bullish trade. Look at Halliburton, and notice how you're starting to push into that upper band, and this is a really good example of how it pushes up, pulls back, pushes up, pulls back, but all of it is contained inside those two bands, in this case the upper and the middle band. A couple of times it pushes outside of the band, and when that happens, what happens? Almost immediately it pulls right back inside the band, and then it continues. And you can see these trends go on for a long time. It is a typical trend trade. Again, it's built on a moving average system, so it's going to look a lot like that moving average trend trade. But you'll see these things go for a long, long time. A lot of times it'll correct right to the 20 period and then bounce, or bounce up to the 20 period and then continue. But they're typical trend trades, and again, this is how you see it presented inside the Bollinger Bands. And now the final trade, the final play we want to talk about inside the Bollinger system is what we call the reversal. So what happens with the Bollinger Bands is they provide a framework for the price action of the stock. We've talked about that quite a bit in this first lesson. It's a framework. It's an overlay. It lays over the stock. Well, naturally, trends are going to get started, trends are going to continue, and then trends will reverse. So the squeeze is the beginning. The trend trade is where those trends are continuing, and then the reversal, this is how the trend starts to terminate as that move is done. So let's look at how this starts to shape up here. You're probably familiar with double tops and double bottoms. We call them M and W patterns. And what's great about the Bollinger Bands is they give an interesting framework for seeing those M and W patterns play out. In fact, in a later session, we're going to talk about M and W patterns inside the context of the Bollinger Bands here. But the M and W patterns are going to appear inside the bands, and typically these are going to lead to, if not a full reversal, at least some sort of a variation of an insight that you can get for those trend reversals and stops. Take a look here at this picture of Disney. Notice what happened. We had a little squeeze take place here. We pushed higher, pushed outside the band, back inside up to the top, and then watch what happens. I'm going to draw this specifically. You see we made a top, we pulled back, we made back to the exact same high. This is the beginning of an M pattern, and watch, there it goes. And you see how we're pulling away from the band here? There's your M. We're pulling away from the band. One of the key signals here is that the bands are expanding. They keep going higher while the stock is not going higher. You see that? This is your classic Bollinger Band reversal. And watch what happens with the trade. We got into a squeeze and we got a full-blown reversal. Now, this particular trade, I want to just highlight for you, it actually turned into more of a triple top here as we hit that same resistance 3 times. But the way you're typically going to see it on the Bollinger Band is as an M pattern. And so we'll talk a lot about M's. It's going to show up as the M first, and then it got into the squeeze, the consolidation, that contraction there, the volatility, and of course it ultimately reversed here. So we'll talk about that again in more detail in a later class, but I wanted to bring this to your attention here. Here's another reversal. Take a look at how this Euro US dollar trade worked out here. So here's the way the M starts to shape up. Boom. It makes a bounce. It pulls back down. We're not getting down to the band here. And where does it go from here? Oop, there it is. Breaks up into a full-blown reversal. Now notice I'm going to draw the W here so you see the full way that this took shape. This actually is almost a full combination of a squeeze and an M both taking place together. I'm saying M, I'm meaning to say W here. It's W for winner. It's a double bottom. And then take a look at the top here. We had the opposite. Look at that leaning M as this trade is starting to run out of steam. There's actually multiple variations of this. There's really 16 variations of these M and W patterns. We'll talk about some of those when we get to class number 3. But I wanted to bring your awareness to it and just kind of start setting these chunks in place as we start to talk about the various plays that are available with your Bollinger Bands.